Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Monday, February 11th, 2008. Well, here we go again, a new week of excitement in these crazy markets, and we're going to get started right away, but first I just want to touch on one small thing. And as you guys know, in the last couple videos we've mentioned we've been expecting a small rally here. And today, for the first time, it looks like there's a possibility that that rally is coming to fruition. And just to touch on what the markets did today, we saw the Dow up 58 points, or about 0.5%. The NASDAQ up 15 points, about 0.66%. And the S&P 500 up about 8 points, or 0.6% as well. So, nice day on Wall Street. Not a lot of activity going on in the markets. Just kind of like a initial sell-off early on, followed by a nice smooth rally all day long with the markets going back positive and then closing up near their highs, although off their highs, but nonetheless a very nice move up today to start this, what we've been expecting as a small push up. Now, many of you guys are probably saying, well, how do you guys know? Every analyst out on TV, media has been calling more downside. These markets could get ugly, et cetera, stay away from the markets. And, by no stretch are we saying that this is the start of the rally. It may be, it may not be. We could see some more whipsaw action this week as it is options expiration. But, obviously we look at multiple things to decide where these markets are most likely headed, and more times than not we're right, as all you guys following the videos know. Yes, we are wrong occasionally, but for the most part we are right. Now, we look at psychology, we look at the technicals in the charts, technical indicators. We also follow some of our proprietary analysis techniques that we've developed over the last few years as well. And you combine these, and as long as, let's say we have 10 indicators we follow closely, what you want to see is about 8 of them to 8 to 9 pointing to a rally or to a possible bounce. If you can get that type of ratio, you could be looking at a bounce, and that is what we are thinking of. And again, I want to stress how key it is here that we're not talking about a major bounce here. We're not talking about a huge rally up by no stretch. So I want to make sure that's clear, because I know a lot of people take the word rally and run with it and say, oh, we're going to go back to the hot. No, we're not saying that. Absolutely not. 100% not. We're not saying that. What we're saying is that multiple indicators are pointing to another move up before the next leg down. And we mentioned this in the Sunday night free chat last night that we were expecting this, and it does look like it's a possibility, and again, it's a possibility. You can't jump on the bandwagon just yet because we need to see follow-through tomorrow. And again, you guys know how important it is for me when I talk about follow-through. Any chart, any movement in a chart, I need to see confirmation and follow-through to say that it's the correct move. So obviously we're going to watch for this tomorrow, but should we continue with the move up tomorrow, I think it's a fair bet to say that we will retrace. Now let's get right into these charts here intraday. Number one, we had an initial sell-off here, and this is the futures intraday, and we always use the 10-minute on the futures chart, and this is the March 8 contract on the E-minis. And here you see, initially we were trending up slightly, and then we saw a rollover, and that rollover started around 8:30 and basically took us down to about 10 o'clock. And you guys know from key reversal periods, and we talk about this in the chat room, there are key reversal periods throughout the day, 10:30 being one of them. And right away, at 10:30, note right around 10 o'clock, 10:30, that key reversal time, and up we went. Nice little rally right into the 200 moving average. And we even broke through what's called a necktie here, and you can see that, and I'll actually cross it right there. The necktie is the crossing of two moving averages, which is a double area of resistance when you're going up to it. And we broke through that without any problems, but we did stall out at the 200 moving average. All right, now you might say, well, why, if we broke through the necktie, did we stall out right above it? And the reason, in many instances, the easiest way to explain it is this. When you take all that energy to get through a double wall of bricks, let's say I'm pounding away at that wall, I break through a double wall of bricks, the next wall of bricks, which is a pretty substantial one being the 200 moving average, can often, after that I've used up all my energy and I can't really get through. I need to consolidate, or what's called consolidate, which is gathering your strength again. And you can see that. We see a nice topping tail here, selling off. You see a pullback right to that 20 moving average, or what's called a consolidation period. And then off we go again, blast up. This time we close above. We retrace back, test that double moving average here of the 50 and the 200, and off to the races we go. And then it's just a matter of pulling small pullbacks, retracing to the high, small pullbacks, and so forth all the way the rest of the day. You guys can see right here we hovered right around that 20 moving average for the rest of the day. Now, I love it. I love the charts in intraday, and I want to just point out some key things. And you guys know how I feel about synergies and the keys in charts and how everything has a parallel. All these charts mirror each other so beautifully. Everything has to do with geometry. You name it, it's all mathematical in these charts. Everything has a reason. And I want to just show you the 60-minute and point out some keys. And this can be drawn in earlier today, and I drew these in on my intraday chart in the chat today. And I used them to talk about where key levels were that we had to break to the upside and so forth. So I'm going to switch over to the 60-minute here, and I like spending some time on this technical side of things because it gives you guys a real good view about what's actually going on. So let's take it into effect. Here's the 60-minute chart, and you can see we go back as far as a few days ago in the market to February 7th right here, and this is actually the 6th and so forth. But let's look at these keys here, because if you draw lines, look at where we come to and where the market went to and rallied. Look at that. You have number one is a line. This line was a nice solid support area in the market, and right here we can see it held up all the way through. So if you connect these lines across, let's say I connected this to this to this, then today I already have that support line because I'm ending it right here. And this is today. This is all of today on the 60-minute. And you can see I draw it right up to there, I extend it, and you have key supports. So every time that market comes down and hits there, I'm looking to buy. And look, at not once does it push below. It even fakes people out by dipping below, but it never closes below, and off we go to the rally. So that's the buying opportunity right there in that chart. In addition, you even have a better line formation, and I would start out by putting the line to right here, and then extend it, and even there's the lower low on the next support level that was hit and held as well, where you can see a triple bottom right here, 1, 2, 3. Now on the upside, you might say, all right, well, what's the keys to the upside? And I could just find these key lines here and draw it right out, and there we go. And what you can see here is you connect these lines across, that's the upside resistance on the 60-minute. You can see they got above multiple times but could never close above that line drawn in there. Now there are multiple other lines in this chart that we could talk about. I could go on and on about it, but I don't want to take up too much time here. So let's focus in on where the markets are today. I'm going to flip to the NASDAQ daily now, and we just want to focus in on where we've come from. You guys can see is we've been talking about a possible bounce for the last few days. Friday we got the NASDAQ to be positive while the Dow and S&P were weak. Today we got all three indexes to be positive, and here on the NASDAQ you're starting to see a small uptrace here. Now the first area of resistance is going to be this point without a doubt. Alright, so expect some resistance to be into here. It will, notice how also this line coincides almost identically with this gap, and we do have a gap in the chart. So if we can get above this 20 moving average intraday, then look for a fill of that gap to this point right here on the NASDAQ, and then possibly higher. The next area of resistance would be right here, and then after that we could have a possible move up there. I don't know, that might be getting a little ambitious, but anywhere in this range I would say would be a good call on the upside should we get over this 20 moving average. Now on the downside we're holding some support here, or right around here would be the support I'd be watching, and if that breaks to the downside, and this will be support, alright, so let's extend that line as best we can, then the next area of support on the downside would be this area here. Should that break, well then we have to reevaluate the whole chart system and see where the next low will go. But as of now, this should be very solid support in the near term. Alright. Also, what I want to point out here is you can see some positive divergences. This little bounce right up here. Alright, look at how low the stochastics were. Now here you have this bounce in this market, which is lower than this point, but we have a higher divergence here on the technicals, on the stochastics. So again, that is indicating that we possibly do have some, and that's just one indicator we use, guys. Again, keep in mind we have many proprietary indicators that we've developed that are telling us certain things as well, and we have a good ratio of winners to losers without a doubt. Alright, now again, research in motion was very strong today, and it is pulling back after hours, and you can see this is the 60 minutes, so you can see the move it's had. After hours there was an outage in the research in motion, the Blackberries, and it is getting hammered just a little bit down, about $1 or so after hours. I have a feeling they'll fix it pretty quickly, and you won't see too much more downside in that stock unless it turns out to be something major, and I just don't think it is. Now the key here, folks, going forward, and let's look at the SPYs as long as we have the chart up here on the daily. The SPYs are still holding this support level right here, and you can see how it was basically the low of this candle, and then we retested, we held, never closed below this low right here, and I can even draw that in a little more accurately right there. Alright, so we'll take out that bottom one. So this is the main level support on the SPYs, and we'll kind of focus on this to see where we go. We are hovering right underneath that 20 moving average again, and so this is going to be the near-term resistance that we're going to watch for, and after that, we'll see what happens. There is another gap in this chart, and that has to be watched, and I'll just point out the gap. It's this area in between is the gap. So the gap window usually serves as resistance on the upside. Should we pierce that gap window, then you usually fill the gap to the upside, and possibly then we reevaluate where the chart could go, possibly as high as here or up to here. So again, multiple areas to watch here, and each time we close above that or pierce it, you could see a move to the next resistance level on the upside. On the downside, it's very key we hold this line right here. All right. Any type of bad news out there that we don't expect, and you could see the markets break lower again. Very important we hold some of these key support lines. All right, folks. I know it's been a lot in the video today, and I don't have much time left before the video is tops out here at 11 minutes. But I just want to hope everyone had a wonderful weekend. Come join us. Come join the intraday stock check. Come join the swing trade alerts, and do private consulting. Whatever you guys need, we're here for you. Have a wonderful day. Take care.